I'm Ben Rubin. I am an executive vice president and market head for premium finance and capital markets at Wintrust Financial Corporation. Wintrust is a publicly traded regional bank holding company with 16 bank charters, primarily operating in Illinois, Wisconsin, Indiana, Michigan, and Florida. We have specialty finance divisions, specialty lending divisions, including some of the largest premium finance businesses serving North American clients. First Insurance Funding of Canada, First Insurance Funding in the US, serving insurance premium financing for commercial property and casualty businesses, and Wintrust Life Finance, which finances life insurance premiums.
Okay, and what is your route to market? Do you work directly with carriers or through agents and intermediaries, or people come to you once they have a policy that they want to spread the payments
Sure.
for? How does that go to market look?
Yeah, so we do work with insurance agents and brokers primarily, but also with managing general agents, wholesalers, insurance carriers, really any, and even insurtechs in the space. Anybody involved in the insurance premium payment process is somebody that we can work directly with. Typically, the insurance broker or agent, though, would be the primary source that we work with.
And do you do consumers as well as businesses or enterprise, or how do you distinguish between your end customer, I guess?
We've seen the largest market in the commercial space. That's been the root of our business. We do consumer premium financing as well, although it's a considerably small part of our business today.
Okay. So today we're talking specifically about innovation as it relates to business insurance products and services. When you think about your role, premium finance, and how it's evolved over the years, what impact or what role has it had for small business insurance products in general?
Sure. Premium financing continues to be a key resource for small business owners to align their insurance payments with the term of their insurance policy. Insurance policies are traditionally 12 months in term, and with the increase in premiums, insurance premiums that many insureds have experienced in the last several years, the cost of insurance has gone up. And businesses have to manage their cash flows, and they have this insurance asset, which is a 12-month asset. So premium financing provides a way to sort of align that working capital flow with the length of the asset, which is that 12 months. There's been an increase in the excess and surplus lines insurance, which is policies where carriers typically like to be paid in cash up front. They don't want to offer payment terms of their own, or you might have multiple insurance policies that you'd like to have one single monthly payment for. An insurance premium helps serve that need for small and medium-sized businesses and even large businesses. But with that increase in the excess and surplus lines as a portion of the insurance premium space for businesses, it's just increased the need for premium financing that much more. So it's become more important, and we've seen an increase in the last, half dozen years in really businesses using this to manage their insurance premium cash flow.
Why doesn't every carrier themselves offer kind of a monthly premium if that's so preferred by their customers? Why is there even a need for someone like you to come in with your sort of expertise and experience to provide this particular solution?
So insurance carriers are predominantly balance sheet companies. They are, collecting assets and managing their liabilities and trying to maximize their return. Collecting payments is an operational challenge, right? Particularly as premiums can be, relatively small for these smaller businesses. For a carrier, while it's a big expense for the business, you think about collecting on thousands and thousands of policies, it can be an operational challenge. So, they want to be as efficient as possible so that they can provide the cheapest insurance premiums, and having operational costs in their business, just is one additional cost they have to charge for, right? And so outsourcing that or collecting in full is a good option for them. Where premium finance is also just a benefit to businesses. When you think about a standard small business, They will have typically a property coverage, some sort of liability coverage, a workers' comp coverage, a commercial auto coverage. If they're a bar or a restaurant, could have liquor liability. Each one of those may be placed with a different insurance carrier. It may not be a package with a single, right? And so even where one may offer a quarterly payment term, one may offer a monthly, one wants to be paid in full, it can be an easier process for both the broker and the insured to just pay a smaller down payment, stretch that out over 9 or 10 months, use their cash flow, and have one single monthly payment as opposed to trying to manage the process of that small business for multiple insurance policies.
So I feel like premium finance is a relatively mature proposition. So what do you do to stand out against competition? Like, what is your unfair advantage, or what do you do better than anyone else? Why would brokers choose to work with you or carriers partner with you?
Well, it's like most things. I mean, First Insurance Funding is our special sauce, is our people first culture backed by our technology. So we're innovative in how we work with our clients. There are insurance policy provisions that might be challenging for other providers to work with, right? Where because of our relationship with our clients and how our team takes time to get to know the specific insurance products and the programs that our insurance broker, carrier, MGA relationships are offering, we're able to do things that others may not be willing to. So we build those really strong relationships and then support that with technology. Another piece of the puzzle, we talked about carriers needing to be efficient. The insurance broker and other intermediaries in the chain all need to be efficient as well. And having technology that makes their processes more efficient and easier, solidifies those relationships and is a differentiator for us. So, our goal is to just automate as much as possible, create connections through their agency management platforms or through other avenues as we go through the insurance premium payment chain, and reduce manual data entry, reduce, sort of any of those friction points for our counterparties so that we can have as efficient a process as possible and provide excellent service. You have to have technology to be able to do this well with a pretty low average account size and premium financing. But if somebody can't reach somebody that they know and trust and can answer questions about a specific quote, or we can't help them with something that doesn't fit the standard terms and do that really quickly for them, then you're not a good partner. And so we've been really effective at marrying that customer service with technology offering, and that's been our differentiator.
So obviously, Wintrust has been doing this for a few years now. What would you say has been the biggest points of evolution or innovation over the years? Can you see a trend or a pattern, milestones, if you will?
Yeah, I mean, it's technology to a great degree. I mean, we've started out from the beginning, as I said, with just really solid people and making sure that service and culture are a part of our DNA. So set that aside. The evolution has been technology and making sure that we are able to maintain a vast API library so that we can partner with all the insurtechs out there, with all of the agency management platforms out there that we can do off the shelf. We can do customization as needed. We work our business into the workflow of the broker. And at the advent of COVID and needing to be more efficient and needing to do things more electronically, right, where you can do things without paper, we were already at the forefront of that, and we're able to really take brokers through that process of presenting a binder to an insured, offering the opportunity to pay in full or premium finance, and provide workflows electronically for them to do that with us. So we were at the early stages of that, and that was really transformative for us and for the industry.
And can you walk me through kind of a use case? What does it look like from the moment a carrier has provided a quote to a broker or to an end customer, and where is premium finance introduced, and how does the payment start? Like, can you give us a sense of the life journey, I suppose, of a customer using your services?
So whether it's a new policy or an existing policy that you're renewing through your insurance broker or intermediary, you're talking with them as a small business owner about losses you may have had, claims you've had on your business, what might have changed in your business. You're really educating that insurance agent or broker around what's going on in your business so they can get you the best possible insurance placement with the most coverage, the best premiums that fit your ability to pay, et cetera. So that's sort of where the whole process starts. Is you've got to get the policy specifics figured out, determine who the carriers are, et cetera. So you get to sort of that policy binding place where it's okay. We've got all of this figured out with our insurance intermediary, and we're ready now to bind the policy. And that's where now what the premiums are, who they need to be paid for, to and when. And that's the point where the insurance intermediary is now having to go to their customer that they've been working through really risk management with on sort of how to have this. And now it's okay, now we need to pay for this. What's the best way to do that? Because we integrate with really every system out there, most of the insurance brokers we work with have it embedded within their agency management platform that as soon as they have those binding materials, they can literally hit a button on their management system and produce a premium finance contract under pre-agreed terms with us. So based on our relationship through that broker and the types of business they place, they're authorized to just generate an agreement. They then go talk to their borrower / insured, the policyholder, and say, here you go. Here are the terms. You can pay the carrier in full if you like, or pay on whatever payment terms they're offering. Or if you want to make a small down payment, have 9 or 10 monthly payments, and pay this third party, they'll arrange the premium financing for you. So they really originate that for us to a large degree. If there are terms in the insurance policies that are different than traditional policies, or there are the size of the loan is exceptionally large, et cetera, then they may contact us to get a more bespoke quote. So again, because the average contract size is relatively low, we want it to be as efficient and provide as much streamlined as possible for brokers, but they always have that ability to call us or email us and get something that's a little more tailored to a specific need if necessary. But they then get that agreement signed. They get the down payment collected. They notify us. We fund the remaining premiums to the carrier. Following which, notices then go out to all the parties involved in the insurance policy. So insurance carrier, managing general agent, wholesaler, if there is one, retail broker, policyholder, letting them know that this is now a financed insurance policy. Just making sure everybody's aware that there's financing involved. The borrower then gets, monthly statements electronically or snail mail or both if they so choose. They make their monthly payments to us. Many of them set up on just auto debits with us to make their process as easy as possible. And you're sort of off to the races. If somebody goes past due, there's past due notices followed by what would then be a notice of intent to cancel. Or eventually, if they remained in default, a cancellation notice that would serve, notice that policies should be canceled, with the return premiums or the unused portion of that annual policy premium coming back to help satisfy the loan balance. These policies that are being financed are policies that businesses need to manage risk in their business, and in many cases need to legally operate. Certainly workers' comp insurance and commercial auto liability for trucking businesses, et cetera. So these are loans that have a predictably low default rate. This is really to manage cash flows for businesses, and there's an exceptionally small amount of them that actually default. So, the vast majority of these pay out through the normal monthly payments.
Thinking about pricing specifically, you kind of touched on it. If it's like a low value, maybe a traditional premium, maybe it's more fixed. Do you also employ like dynamic? You talked about bespoke or more larger transactions, but how complicated is your fee structure versus kind of the rules based? Is risk versus amount versus volume, etc. How do you think about pricing?
So there's sort of two dynamics in play there on any individual insurance premium finance agreement. One are the terms, right? The amount of down payment and the number of payments that determines how much, if any, unsecured risk there may be on the loan. But predominantly, we have set programs with brokers, and that's, the vast majority of the loans come through that process where it's just agreed upon terms of, we'll take X amount of exposure on a loan, pay us a 15 or 20% down payment, 9 or 10 monthly installments, and just push it through on pricing sort of not specific to industry or anything along those lines, unless there's specific programs they've identified for us that they want particular terms on. On those larger loans or those custom terms, like I said, we could always do that more bespoke offer for them, but this is largely a trying to be as efficient as possible, which generates the lowest cost for us, for the borrower, and for the intermediaries to effectively administer the loans. So that's generally sort of the approach here. But we do look at macroeconomic trends, right? If there's a particular industry that we're seeing challenges with, we may tighten terms in that market. It's typically not a pricing discussion as much as it is maintaining credit quality and making sure that, if a higher proportion of insureds in that industry are going to be defaulting because of challenges there, that we've got enough return premiums to make sure that the loans are satisfied so the borrowers don't end up having to owe something outside of that.
And thinking about your own kind of journey ahead, I suppose, as a business, what are the barriers to growth? Or like what are the bottlenecks in your future expansion? Is it the reliability of onboarding new brokers, regulation, technology, customer awareness, or how do you think about growth and strategies around that?
Sure. Well, we talked a little bit about, the insurance premiums themselves, right? So when you're a lender, you think about growth in a few different ways. One is unit count growth, which we always want to grow. The other is just pure dollars of lending, and as insurance premiums have gone up the last several years, if we had a customer finance premiums with each of those years, their loans were getting bigger just because their insurance premiums were going up. We're starting to see that trend reverse, where insurance premiums are softening a little bit. So they're not going up by as much, or they might even be flat this year. So that's a challenge to dollar growth, right? And that's something that, again, we look at growth two ways. One is unit count, one is dollar growth. And the dollar growth can sometimes just follow the industry in terms of where premium rate increases are taking place or not. So we focus on both, and to your point, making sure you have the right intermediaries and intermediaries that are growing and continuing to work with us while they grow. That helps us on our unit count. The other barrier to growth is as we've talked about, as a throughput to this kind of conversation, is really just technology and how technology changes, and there are more insurtechs and other parties in the insurance premium payment process that are, taking up space, right? And they're taking up space in the sense of, those are parties that we need to think about how we work with and how we have connections with them. They're serving the brokers, the carriers as another intermediary. And for us to remain relevant and to continue to grow, we have to work with those parties as well. And we have, again, as I talked about, sort of successfully focused on our people, our culture, and our technology, so that we view these challenges as really opportunities, because we're a fast mover and we're able to integrate with these businesses really effectively.
And looking ahead again on a different lens, from an innovation lens, perhaps,
Sure.
and to wrap things up a little bit, where do you think the market is currently being underserved, or where are the gaps when it comes to premium finance? I don't know if it's, you've talked about technology and how that's improving,
Right.
and etc. Are there other examples of blind spots, perhaps, that you think could be an opportunity for yourselves, or I guess insurtech challengers or
Sure.
fintech challengers, maybe?
I mean, it's a pretty mature market, as we talked about before, very well served. There's a number of competitors that we see, on a day-to-day basis, and are covering the space. So I don't think there's gaps from that perspective. The biggest overall, sort of challenge, I'll say, for the industry and for everybody, and really the place insurtechs are making a name for themselves is that efficiency and just trying to make sure that we're being as efficient as possible. The biggest challenge, I'll say, in the space for all operators, and this holds true, I think, for everybody, is being able to validate the insurance policy information between all the parties. Every premium finance business out there spends some of their time on risk management credit, just identifying, confirming that the insurance policy information is coming through correctly, right? That there wasn't an amendment or an endorsement to the policy that wasn't picked up, or making sure the right counterparties were identified by the insurance broker, et cetera. So, a technology solution or counterparty or intermediary that would find a way to make that more efficient for the industry, that's probably a gap that's out there for everybody that's not been filled yet. But aside from that, in terms of the actual just sort of business itself, again, it's very mature. Everybody, I think, who wants a premium financing option has plenty of parties out there willing to provide it for them. And while we're one of the largest, there's several others that are they're nearly as large, or focus in different areas that we compete with regularly. So it's a thin margin business, but one that you do on volume, and you do it with service, and you can be really effective at having a nice, solid business.
Ben, thank you very much for your insight. Really appreciate you sharing so generously.
No, my pleasure. Great to meet you, and happy to be a resource as you consider this industry.